Hey guys, this is Michael again with the Conversations with a Recovering Loan Officer podcast. And today I'm joined by a very special guest and friend, Brian Vieaux. And actually, I didn't even know how you pronounce your last name till like a month ago.
You nailed it.
I was always trying to say like Vieaux.
Yeah.
I don't know.
I never I always make it, I like to hear people butcher it. So they're like, why don't you just tell me? I'm like, it's fun to hear people butcher. It takes me back to my grade school days.
Well, yeah, and my name is, I've only had 2 people ever say my name correctly. So here's my challenge for you. What's my last name?
I'm going to call it, since you painted this picture, I'm going to say Neef.
Oh, close. No, it's Neff.
Yeah. So
yeah.
I always think of it as Neff because I'm like erroneously reading 2 Fs.
Well, no, that's correct. Because it's German, I guess. Yeah, apparently we do things weirdly.
There you go.
So, yeah. So anyways, thanks for joining me today.
Thanks for having me.
You know, I met you years and years ago, kind of like on the Dog and Pony show at one of the conferences. You guys were set up next to us, I guess.
That's right. Yeah, we were in Vegas. I think it was at one of the AIM events, and we were wall mates.
That's right. Yeah. And I didn't know who you were, but since then we've had a lot of conversations and got to know a bit about your background. So why don't you tell everyone who's listening, who you are and what your background is?
For sure. So, again, thanks, Michael, for having me on. I love the title of the podcast. I think we're all recovering loan originators to some degree. So I'm Brian Vieaux, President, Chief Operating Officer of FinLocker. FinLocker's a fintech that's been around for a handful of years, maybe 5 years. And we focus on helping loan originators, lenders, loan originators attract and engage consumers at the top of the funnel, specifically with kind of mortgage readiness as kind of an objective. I'm sure we'll get into more of that. Prior to coming over to FinLocker, which is getting on 4 years, which is crazy, I spent 28 years in the primary mortgage origination space, with the majority of my career managing large production operations. My most recent gig was with Flagstar Bank, where I ran the third-party business before coming over to FinLocker.
So you were on the TPO side.
That's right. Yep, I ran all of the TPO for Flagstar. Yep.
Yeah. And you weren't that far when we first met. You were just kind of fresh into FinLocker stuff. Yeah, and a vision for your product at that point was a bit different. You guys have pivoted, right?
Yeah. And I think this is a good lesson for anybody that's kind of out there in business, because you have to have some flexibility and kind of move with the market and react maybe to other market participants, like competitors, right, wrong, or different. It's part of navigating the landscape. And so when FinLocker was first founded, and the initial product that was built was focused on a point solution in the middle of the loan manufacturing process. And specifically, that point in the process was digitizing bank statements, is one way to think about it. So we all know the horror stories of asking your borrower 10 times for the 8th page of the March bank statement, and then they send it to you, and it ends with page 7 of 8. Well, why would I send you my blank page 8? Well, that pain point was one of the issues. The other, probably more significant issue, is underwriters having to sift through all these transactions to make sure there's no anomalies in terms of large deposits and things of that sort. So the use case that FinLocker sought to tackle was kind of helping processors and underwriters better analyze bank statements using the data instead of the documents. And so, in essence, the prompt would be a user would have been invited to create a locker, a financial locker, thus the term FinLocker. And in that locker, they would link one or more bank accounts that they're using for their down payment closing costs. And then they would agree to share the output from those accounts with the lender, right? This goes back 6.5, 7 years. So it predates day one certainty. It predates a massive adoption we've seen, in digital verifications at the consumer and lender level. And so when FinLocker wasn't seeing kind of the uptake that they had hoped for, they were smart enough to kind of look at what they had engineered, get some feedback from the market. And the first pivot was to build off of this concept of a financial locker and add other components to it that started to build out this more holistic financial fitness experience.
Mm-hmm.
And then when you and I met probably 3 years ago, and that's after I'd been with the business for around a year, maybe 10 months or so, I started to get a lot of feedback from the industry and from loan officers specifically. What they really were looking for was something innovative and new that they could use up the funnel early in a consumer's kind of financial journey, in the homeownership journey, to help that consumer prepare for buying a home. And it's really kind of taken hold. Now, what I would say is the pivot, the idea was great. Timing is everything in business. And our timing with that iteration was square with COVID, with the pandemic, and with I'll call it now, the artificial depression and drop in interest rates, which led to unprecedented volume, which probably good for businesses like yours, not so good for startups like mine at the time. At that time, it was like loan officers were saying, love your idea, but I have more business than I know what to do with. I don't have enough capacity to handle what I have. So now fast forward to today, different market. We've got this built up bubble of first-time home buyers that for all kinds of reasons have not been able to enter the process. There's more of these people that are going to take longer to get ready than ever. And now our tool really is resonating with the industry and with loan officers in particular.
So when you say like the top of funnel, right? So for those of, who are listening who are not necessarily marketers, right? I think a lot of loan officers do marketing without realizing what they do is marketing. But top of the funnel would represent at the very top, maybe even before the consumer is aware that they are potentially interested in buying a house. Is that how far you guys move?
We'll go as far as our client, lender, loan officer are willing to go, because our tools, let me paint another picture that might really resonate with the audience. Everybody that's listening and watching certainly knows who Rocket Mortgage is. Yep. And most people now are aware that Rocket Mortgage has a personal financial management app called Rocket Money.
Yep.
What Rocket has done is they've created the playbook for the rest of us, for the rest of the industry that's not Rocket Mortgage, on client acquisition. And if you study Rocket Money, it's pointed at the earliest entry point for a consumer's financial life. So I kind of think about, call it recent college grads, people that are just kind of entering maybe their working career. That's where Rocket Money is pointed to, is that segment and beyond. But their playbook is engage with these financial tools, these personal financial management tools, get them into my ecosystem, get them under my brand, build trust, build awareness to the brand. And what Rocket is doing is they're building in experiences and journeys now inside of Rocket Money that start to identify when somebody is entering that home buying mental state, if you will, right? And now when they're entering that process, they're starting to introduce other tools that are going to help them along the way. And they're just pulling them through that funnel, if you will, through that ecosystem. Mm-hmm. What we've built essentially is the Rocket Money tool for everybody that's not Rocket Mortgage. And to your point, Michael, when you talk about up funnel kind of marketing, what I talk about with originators every day is, if you study the tools in FinLocker and Rocket Money and in Mint.com and Credit Karma and Credit Sesame, and you start isolating on all the different tools that impact, credit. So credit score, credit monitoring, credit alerts, credit simulation, and then all the tools around kind of personal financial management, from spending analysis to creating and tracking budgets and creating and tracking savings goals, whether it's saving for a new home or even starting with saving for a new car. All those things, all those activities, if you're using social media, which a lot of loan officers are doing today, you now can start talking about things that don't even mention the word mortgage, that start attracting young people who are young in their financial life into your brand, both your personal brand and your company brand, mm-hmm. and using tools like FinLocker as that hook, that call to action to actually engage them off of those messages. So that's kind of, when I say up funnel, that's what I'm talking about, is, to your point, that when getting to somebody before they're even considering or thinking about home buying as an activity or a goal.
And so then you're putting not only the brand of the loan officer kind of in the forefront of their financial management, but you're also looking at the data to identify events or milestones that might lead to, or the actions lead to, common result of buying a house.
Yeah. It starts from the point in time when someone downloads the app. The first screen or pop-up, whatever you want to call it, that they get is just a quick answer to this question. It's a simple question. And we just want to know, where are you on your homeownership journey? Could be renting and I have no plans to buy in the near future. It could be I'm just starting to think about. There's like 5 different answers. One answer, which is really interesting, is I want to buy, but I hit a road bump, right? I need help. And so we take that answer, and that answer becomes the persona tag against that consumer in that locker. And then their engagement that starts to happen beyond that first enrollment is all leaning towards that place where they said they are on that journey. Mm-hmm. And so the app is going to start prompting them to do certain things in the app based on where they are. If they already own a home and they just want to keep tabs on the value of their home, they can do that and nothing else in the app, and that's fine. But most people, again, up the funnel, are in some place of considering or starting, or are in the middle of getting ready, and the app will start to prompt them to do things that are logical 6, 12, 18, 24 months out, like understanding where you spend your money today and maybe creating budgets to help better, manage that spending, as an example.
Yeah. That makes a ton of sense. And it's also sort of like a new frontier for marketing where loan officers have never been able to be involved in that. I mean, the earliest up until in the last couple of years, the loan officers could really be involved is maybe through like friends and family referrals or through real estate partners who are not going to capture awareness or interest from the consumer until they're looking at homes.
Yeah. Yeah.
And so now you're saying you've got people coming out of college and they are getting bills for the first time and they want to like figure out how much they're spending on Netflix and Hulu and all these things combined, and it has nothing to do with mortgages, but the natural progression of an adult in the United States is you go to work, you spend money, you talk to people, your friends and family start telling you about buying houses, and you move into that process.
Yeah.
And so I've always, like in the last couple of years, I've been sort of like seeing what Rocket and what Zillow were doing for the American consumer. And the way I visualize it is like a draft day. You remember when you're like in middle school and you're on the field and there's two like captains and they're like, I want Brian, I want Michael. And like you're on their team for better or worse for that recess.
Yeah.
Well, recess is the awareness of the consumer. And if they bring them onto their team and they own that educational process, the methodology, like all the information they're absorbing, the triggers, the data, what are the chances they're going to do a deal with Rocket?
Yeah.
Really high.
Really high.
And so like, how are you as a loan officer who are not working for Rocket going to compete against that when you're not even in the game when that person graduates college? There's no way to do it. You have to find systems like yours.
Yeah, I think it's more than the technology, because I think there's plenty of apps. We've already named a few of the logos, right? There's plenty of apps that are out there for, the broad consumer base. Where I think the rubber meets the road and where the true value is when I'm a firm believer in the local loan originator. I think there's so much value still in that local loan originator for all kinds of different reasons. And I think especially now when you've got this massive population of prospective first-time home buyers, it's getting harder and harder for them to find homes for various reasons, whether it's inventory or what have you. When you can combine that local expertise and that local financial coach, that home ownership coach, if you will, with technology, that's a game changer. I do believe, maybe not at scale, but at a local level, that can beat Rocket Money. That can beat Rocket Money, Rocket Mortgage every day.
Yeah.
And the good news is we're seeing great, pickup in with local loan officers who are they're building a personal brand around financial literacy and financial education and all things home ownership education. And what I love about it is they're not selling anything. They're giving education away. And when someone's then ready, because they've now built this trusted relationship with this person that's helping them understand all these different aspects of their financial life, including the home buying process. There's no sale to be had. It's just a natural, I'm going to work with you, Michael. You've been helping me for the last 18 months, get my budget in order, improve my credit, and accelerate my savings for a down payment. I trust you. You're going to help me.
And a lot of that is sort of done for them through the tool, right? Through FinLocker.
Exactly. Yeah. I mean, the reality of it is most people, especially this younger generation, they want something 24/7, 365. They want it on their phone. That's the other cool thing about what we both have built is we become resident on your prospect and customer's personal computer that they're walking around with in their pocket every day. You're there, you're on their phone.
Yeah, totally. And I think also the way the communication, like YouTube and these other platforms they've changed the way information and education is accepted.
Yeah.
And so it's become a viable, what Elon said the other day, like, why does anybody go get a PhD? You can get everything on YouTube you need. Yeah,
that's right.
It's like, I mean, the man, he just said that, And then maybe in 5 years, he's going to be saying, like, why do anything? Because you got AI doing it all for you anyways.
Right.
Man, that's some scary stuff.
It is.
Yeah. So, I mean, I'm a big fan of what you guys are doing and how you guys are focused on bringing the local loan officer into bat, ready to hit home runs against companies like Rocket, who will continue to gobble up the space through like a really solid product that engages the American consumer.
Yep.
I always like to say that that's kind of how I describe our product too, is that we're, Rocket Mortgage for the people who don't have $100 million to build Rocket Mortgage.
Yeah. And it's pretty cool because if you think about our products together we are arming that local originator with a tech stack that can compete with the biggest marketing budget in our industry.
Yeah, for like a couple $100 a month.
Yeah, exactly.
Yeah, that's pretty amazing, actually. So I love that. Well, I'm super excited about where you guys are going with that product, and I've seen some massive improvements, specifically in the UI. You guys have put a ton of time in like making it feel really solid. You know?
It's our team has been unbelievable in terms of how they've been able to each release. They're kind of raising the bar, and our head of product, Andrea Thomas, is just super disciplined on the feedback loop. So she has a network of consumers that she goes to and gets real-time feedback from them. And this is a group of people that are in this zone that we've been talking about, that 18 plus months out from buying a home type of zone. And she just keeps getting feedback on what's important. What would you use? How would you want to see it? And we take that feedback and it goes right into the design queue, and it becomes what we end up developing on top of. So I'm more impatient. I'm like, I know what they want. Let's just put it in there. And she has got a great way of kind of following the process. And to your point, it's showing in how the product now comes across for consumers and users.
That's a great idea. Actually, occasionally we have a member of ours come and say, hey, can you call my client? He's having an issue doing this thing. And I'm like, okay, I will. But I didn't actually engage with the end user feedback loop. I'm going to need to talk to her about how she approaches that.
Yeah. We've got some resources we can share with you that are pretty affordable. And it's easy for all of us just to say we know this business. You and I were originators in past lives, and so we're smarter than the rest of the world. Well, when's the last time you were a first-time home buyer? Or when was the last time you were 18 months or more away from being a first-time home buyer?
Yeah.
So that's who we're getting the feedback from, the people that are actually going to use the product. We'll take feedback from loan officers, but even then, we want to validate that the end user, the consumer, is going to find value in what we're engineering and building.
Well, specifically because the majority of your value proposition is on delivering quality pre-sold, so to speak, leads.
Yes.
And ours is a bit different because even though we do have a bit of that top of funnel initially from the loan application, which would be much lower than like where people are coming into your funnel.
Yeah.
They're essentially sold at that point, right? We're supposed to make the process easy so that they give a good review at the end of the process.
Right.
A lot of our heavy lifting is like, how do we make the processors' lives easier? How do we make the loan officers' lives easier? And so, yeah, our feedback loop has been more kind of directly tied to the people that are in there every day using it, but I can definitely see how it would be valuable to talk to the end user. So I'm looking forward to checking out those resources. Yeah. So what's sort of on the horizon for you guys? You know, where do you guys see this going in the next 5 years?
Yeah. So we've been very focused on the mortgage vertical. That's where kind of our DNA, but our products, if you were to back up and look at our product from an architecture perspective and from a data perspective, it's not a mortgage tech product at all. It's a consumer finance tech stack.
Yep.
You know, we allow the user to link to their financial accounts, both assets and liabilities, and we suck in all that transactional data and use that in different ways. We allow them to link to their credit and use all that data in different ways. We have the ability to link to payroll, direct to payroll source data. And so now if you think about it, you've got this consumer kind of verified on 5 dimensions: identity, credit, assets, income, and employment. And subset or all of that data could be useful for auto lending, for personal loans, for student loans, for credit cards. And so as we start to think about kind of our world and expanding it, and we're already doing this with some smaller financial institutions, cracking into kind of the credit union community bank space and helping them think differently about how they engage their member or their customer. We're not going to be a banking, a transactional banking platform. There's great platforms for that, but we think we can be an extension of that community bank or credit union's brand and build more value for their member and customer, and using all that direct source data. And now you have these depositories that have other products. They're not just a monoline, mortgage shop. They can be sitting on all this data and use the data in a very intelligent and insightful way to make recommendations on the next best financial tool or product that would be good for that customer at this point in their life.
It seems super valuable for the small banks because there's just almost any bank you walk into, you pretty much are going to have the same service, same product, same, it is very commoditized.
Yeah. Savings rates within a fraction of a percent of each other, right?
Yeah. The tellers are all kind of like the same people.
Yeah.
They do the same thing. They have the same objectives. They want to cross-sell you, upsell you into the thing or whatever. And so having a tool that can actually improve my financial future would be definitely a massive value that would make me more, committed to that relationship.
Yeah. And kind of similar to the analogy that we painted for, Rocket and everybody else in mortgage. It's similar in banking. It's the B of A's and the Wells and the JP Morgan Chases, then it's everybody else, right?
Yeah.
And so we're trying to solve for the everybody else that they don't have 1,000 people in their tech staff to build stuff.
So you're talking with, right now with loan officers and mortgage companies and moving through that process. Like, what sorts of things are you hearing on the streets from them that would be useful, for our listeners to hear? What are people forecasting? How are they feeling? All that kind of stuff.
So the good news is generally the people that I'm talking to they understand that today is today and today is tough, but there is tomorrow and they're going to fight till tomorrow. But if I'm talking to them, there's not a lot of gloom and doom because they've got some kind of a forward vision, which is refreshing.
Yep.
And I know there's plenty of, it's hard. I get it. I'm not discounting how hard the market is. It's very hard. But the folks that are actively engaged with us are looking to the future, and they're building their database today for tomorrow and next year's and the year after's business.
Yeah.
So their vision is on, how do I bring as much value to my community and continue to build my database and my brand such that I'm not solely dependent on, a referral source or referral sources. No one's abandoning the real estate professional. I'm not saying that at all, but they're focused on creating their own funnels and then taking those funnels and creating value back to their referral partners, right? Kind of that holy grail that we've always been trying to do in mortgage is, if only I could get to the customer first and then match them to one of my realtor partners. How powerful would that be? So our kind of tool helps people kind of think about that in a different way, because they're, I think, a lot more challenging for a realtor to get in front of a consumer, 24 months before they're ready to buy than it is for someone that's in the weeds in the financial services business, like a loan officer.
So how does a loan officer use this system with a real estate partner?
Yeah, so there's a couple different ways. One is we have a native integration with a real estate search and value platform called Home Scout. And today, within that Home Scout integration, a loan officer can co-brand the search part of the experience in our product with a realtor. Now, our roadmap, which is not too far away, probably midsummer, the FinLocker roadmap now includes the ability for a loan officer to co-brand the experience, not just the search part of the experience, but the overall experience with multiple realtors. So that's one way, is the co-branding. But then it's supporting, I go back to kind of all the hand-to-hand combat that great loan officers do in their communities. It's hosting, early home buying seminars. It's getting with community groups, whether it's churches and other kind of community groups, and providing kind of financial literacy, education and tools. It's one of the biggest things we're seeing is going back to the social media. It's building social media audiences using general financial literacy and fitness as the hook. I mean, I've got a couple loan officer clients that each have over 350,000 followers on Instagram and TikTok. One just launched a few days ago, and in the first 4 days of them launching their version of FinLocker, they did a very subtle post. I think it was on Instagram. The video never even talked about financial fitness or the app, but in the text in the post, it said, "Hey, DM me if you want early access to my free financial fitness tool." And 40 new lockers created within 3 days of that post. Those are all, and behind those lockers is first name, last name, email address, and phone number. So talk about a valuable short form lead that becomes a long form lead over time. That was pretty cool. We had another loan officer that's managed this smaller community of 10,000, aspiring first time home buyers. And he goes on weekly and gives education content and answers questions. And he did another very subtle post to his community. It was one single post talking about his version of the FinLocker product. And it's led to, I think he's up to 75 of those folks have downloaded and started to engage with it. So those are all early engagements that you can then start to, if I've got 150 people in my version of FinLocker and I'm a loan officer in a community, and I go talk to a realtor and say, "Here's my current nurturing pipeline of 150 people. It's real. You think that realtor is going to want to meet with you?" I think so.
Yeah. And you're talking about 1 week's worth of results. Probably tied to like a year's worth of building
the brand.
Yeah. Brand. Yeah.
Yes.
So, that brings me kind of my next thing, like, if, now you've got sort of this funnel, right, tied to a vacuum that's going to pull people in or whatever. How do you brand is going to be the key to getting this into people's hands, right?
Yeah.
So strategic relationships and branding yourself locally and using video and all that kind of stuff. Have you seen anyone do that really successful? And do you have any ideas on, what they were doing that made it so successful?
I think I'm not going to lie to you that we have clients that are small lenders and their brand may not be as powerful as one or more of our other clients who are, just say, top 5 retail lenders. The power of the company brand is important, and it's meaningful. And what we do see is a difference in uptake based on the power of that brand. So I just want to be transparent that brand does matter to a degree, but I do see where the personal brand of the loan officer themselves can trump the brand of the company they work for. And we see that in when I look at, some of our loan officers that have the most lockers created work for 10-person mortgage brokerage shops. So it's their brand that's driving it.
Yeah.
FinLocker as a brand is not known by the consumer, so I'm not going to add any value from a brand perspective. So, what I'm telling people that I'm talking to is, if you're not focused on your personal brand today as a loan officer, it's not too late. So find a way to start to do that. And if you start with 20 people following you and 10 of those are your parents and your aunts and uncles, so be it. Start somewhere, build an audience, start to build your message, add value, educate, and it'll build over time. But you got to focus on it. You can't, there's no silver bullet. This is hard work. But it's no harder work than going and chasing down all the realtors in your community. It's
right.
Everything's hard work, right? But you got to start, and you just got to kind of commit to it and be consistent. The biggest thing I see on social media, and I'm doing it myself from a B2B perspective, is just every day I'm doing something to get my personal brand and my company's brand in LinkedIn is kind of where I do it, because that's kind of where our target customer is. But you just got to be consistent, and it pays off. It just takes time.
I'm embarrassed to admit, I don't think I've logged into LinkedIn in like a month.
I was there, and about 4 months ago, I just kind of had an aha moment. We're a smaller company, and we're, kind of scrappy, and I don't have like a massive marketing team or a massive marketing budget. And so everything that's been coming in is because of what one or more of us is doing using our personal network. And so I just said, I'm going to double down on this. I'm going to go 90 straight days. I'm going to post multiple times a day. And if after 90 days, I don't see any change, then I'll know that that's not going to work for us. Well, in 3 weeks, we saw the results. Our people, just simple things like tracking how many people follow FinLocker on LinkedIn grew. And then we started seeing things, demo requests coming in, and we were tracking where they were coming from. And so it works. It works in B2B. I believe it works in consumer, direct to consumer as well. But you got to be genuine, authentic, and you got to be willing to commit and be consistent.
And that's it. The consistency, right? It's just like working out a muscle.
Yeah, same thing.
So painful in the beginning.
It is. It's very painful. But there's tools like I with LinkedIn in particular, you can now schedule your posts. So I do most of my content creation on Saturday mornings, and I schedule 80% of the posts that are going to go out for the next week on Saturday. So now my day, nothing gets in the way of what I got to do during the day, because I've already done that stuff. And then I just focus. Usually it's the last 5 minutes of every hour. I'll go and engage on LinkedIn with people that are either commenting on my posts that are out there, or I'm commenting on other people's posts to kind of, just be engaged that way.
You just kind of block that off and make it a habit.
Yep.
Kind of gives you a nice break too from, your normal work grind. And
it does. And like what we're doing right now, we're creating content, right?
Content. Yeah.
This conversation, you could carve it up into probably 12 different, micro pieces, and there's like 3 weeks of content right there.
And we will do that. Yep. That's one thing. So this podcast was our first version of kind of like the Gary V content marketing strategy,
Yeah.
And what's been really cool is that I'm getting a tremendous amount of value from interviewing these people and like learning a ton about just the different ways you can run businesses and the different products that are out there and all that stuff. So it's been hugely helpful for me. And I'm assuming that our listeners are getting a lot of value from it. And then we have the side benefit of being able to put it out there for people to watch and digest. And so.
But to me, the way I think about this is you're bringing value to the market, and I'm pretty sure that prospective clients of yours are consuming this content. And if they're finding value in the content, who do you think they're attributing the value to? It's back to you. And so you're building that trust and relationship, the same way that I describe loan officers doing to consumers on a either hyper local or on a scalable local method.
Yeah, and there's ways. I mean, if you're a loan officer, there's nothing stopping you from doing what I'm doing here. Like your target audience could be like maybe you're talking to local businesses.
Right.
If you want to build like a hyper local, let's say you've got a county or a tri-city area, and your goal is to like work with everybody who does a transaction in those areas, you could easily put together a podcast and have business owners interview them about events or about the politics in the area or about, there's a million things you could do. And I would listen to that because where my kids go to school. And would I work with a loan officer who's kind of doing that? Yeah, for sure.
Right.
It could have nothing to do with mortgages other than the fact that you could say, hey, this is Mike, the mortgage guy, at the beginning of your podcast. And so, that's really cool. Love it. What do you think today when it comes to, you said like personal brand is a big deal and it trumps the big brands, right? And so what I see a lot of loan officers do is they get hung up in the idea that they're competing against some big brand. Personal branding, though, is super powerful, just as powerful, especially in your local area. What's important in a personal brand?
So I'm not an expert by any stretch, so I don't want to come across as I'll leave that to the real experts. But for me, it's I think number one is be authentic. Don't try to be something on social media or on camera that you're not in real life. So be true to yourself, be authentic. Don't get caught up in, over analyzing and over scripting and editing what you're putting out. Cause that, to me, the ums and the ers and the missteps is part of the authenticity. It's part of being, somewhat being vulnerable and, people can relate. So I think you have to, number one, be authentic, be who you are, which also takes a lot of stress out of the process because now you don't have to pretend to be something you're not when you're recording, right? I think one of the best pieces of advice I got from a loan officer who's built a really big following is he takes all the questions that come in on a daily, weekly, monthly basis and answers those questions individually for whoever asked it, but he uses every one of those questions as content going forward. Because if one person's asking a question, there's probably hundreds that have the same question and don't know the answer. Yeah. So each of us is creating content every day. We don't even know it in the form of just answering questions, right? So that's an easy way to think about all the texts, emails, DMs, or voicemails you get from borrowers, prospective clients that ask questions. Answer the question and then go just put your phone on when you're done and you just created a snippet, a piece of content that you can go create a YouTube channel and start having, a database of all these frequently asked questions, right? So that's like an easy way to kind of build around your brand by being that trusted resource for questions. And don't be crushed when you're answering questions and then someone says, Michael, that was so helpful. You saved me. I ended up buying a home and getting a great mortgage. Oh, they didn't come to you. But
yeah.
But just know that you're helping people and that stuff comes back to you over time.
Yeah, they'll definitely come back. I think I know the loan officer you're referring to. Yeah, I'm pretty sure. I'm like 80% sure. Yeah.
Yeah.
And he's great at that content marketing strategy stuff. And what's funny is I've been doing that with my support desk. So when somebody asks me a question about our system and it's not documented somewhere, I shoot a Loom video.
Yep.
I tag the support team in it. I send them the Loom video, said, hey, that's a great, thanks for the question. Here's a video to help you through this. And then we turn that into a guide.
Yeah.
And we now apparently, as of last week, our support system leverages AI to identify when you're, machine learning, when they ask the right question, and then it can produce the video again. And now I've helped 100 people with the question. It took me 2 minutes, and I always leave the the mistakes in my videos, it feels way more authentic. Like when I asked you that question about building a personal brand, I had no idea what I was going to ask you, which you probably could tell. So
felt good, felt natural. I mean, these podcasts, because I have my own, I love the way you're doing it, and it's the same way I do it. It's hit record. There's no edits. There's no filters. It's just a conversation. This is actually, you and I have had these conversations without the camera recording us, and
totally.
And now others hopefully will benefit from just a natural conversation that we're having.
Yeah. Yep. So, yeah, I mean, that's all really great stuff. I mean, I love your product. I think it's great. If I was originating today, absolutely, I would use it. We're going to find a way to work together.
Oh yeah.
Capacity.
We're closer than we're closer than we think. I think we've come up on it. We got a couple ideas to kind of kick around.
Yeah, I do. And then like we're, for whatever reason, this is like this little roadblock. And then it stops, and then we get distracted, and then I'm going to push it through. I'm going to get it going. I've been going through this crazy integration with Ellie Mae.
Yeah. We're there too.
This process. Yeah. I'm in the review process, and it's like, anyways.
Here's what I'll say. I'll put it live on camera, because I'm sure some of your clients are watching and some of my clients are watching. So if anyone is either a mutual client of both of our products and wants to volunteer to kind of help us think about the right way for the products to work together, we'd love to get direct feedback. If there's one of FinLocker's clients that is interested in working with Michael and his team and his product, and vice versa, I think we'd both be willing to kind of put our heads together and think. And I think there's some lightweight, non-technical ways we can be working together right out of the gate.
Yeah, we can definitely get some sort of like minimum viable product that would be really impactful, stand up pretty quickly.
Yeah.
So awesome. Well, any last thoughts or questions or anything you'd like to leave our listeners with?
No, I think hopefully folks have something to think about a little bit differently in terms of, how to one way to build the database using kind of financial literacy, financial fitness, financial education as the hook. That's kind of what I would lead the team with. The other thing is I'm kicking off a newsletter. I've got like 15 different companies that are contributing, and our focus on the newsletter is to educate loan officers on how to educate consumers on financial fitness and financial literacy. So if you go to FinLocker.com, or better yet, go to, I don't even know where it is. Go to my LinkedIn and DM me, and I'll send you a link to sign up for the newsletter. But we'd love to, share the knowledge of this network of people that are focused on financial fitness, financial literacy.
So LinkedIn would be the best place for people to get in touch with you if they want to learn more. They want to get access to the newsletter.
Yeah.
So that'd be Brian Vieaux, Vieaux.
Yep. At FinLocker.
And it's pronounced View. And obviously this episode's going to go viral, so no one's going to ever get your name wrong again.
Love it. And yours is Neff. So that we solved two of the world's biggest problems pronouncing our last.
Totally. Exactly. So, well, thanks again, Brian. And
Michael, thank you.
Talk soon.
All right, man. See ya. Thanks.
Yeah.